Good morning, traders. Welcome to a critical pre-market analysis where the global winds are turning negative. The message from the charts is clear: it's time to be defensive. I'm looking at a sea of red across the board. US markets, represented by the US 30, are down 1.57%. That's very negative. Asian markets are in the red, down 0.68%. Even Europe is pointing lower. And to top it off, crude oil is down a significant 1.40%, indicating concerns about global demand. Against this backdrop, the Nifty is set to open flat to negative. So, the big question is, will our key supports hold? Let's get straight into the levels that will decide the trend today. Nifty resistance, a ceiling getting stronger. Starting with resistance, the path higher is now littered with even more obstacles due to this negative global sentiment. Our immediate resistance is R1 at 25,949. In a neutral environment, this would be a target. But today, with a negative open, this level will act as a strong selling point if we get any bounce. The pivotal resistance is now R2 at 26,034. Given the global setup, I find it very difficult for the Nifty to even reach this level today. Any move up is likely to be sold into. The major resistance wall remains R3 at 26,092. Consider this the bull's distant dream for the day. A break above here seems highly improbable with the current global cues. In short, the resistance ladder has become a trap for bulls. Use any bounce towards 25,950 to 26,000 as a selling opportunity. Nifty support, the critical battlefield. Now, let's talk about the real battlefield, the support levels. These are the levels that need to hold to prevent a sharp decline. The most critical level of the day is S1 at 25,799. This was always important, but with a negative global trigger, this level is under severe threat. A break and close below 25,800 is a major sell signal. If S1 breaks, the fall will accelerate towards S2 at 25,719. This is our next line of defense. A breach of S2 opens the floodgates for a steeper fall towards S3 at 25,619 and even lower to 25,500. Your trade plan is simple: watch 25,800 like a hawk. It's the line between a mild correction and a significant downtrend. Trading strategy for a negative day. So, how do we trade this? Overall bias, bearish to very bearish. For existing long positions, if you are holding longs, today is a day to be extremely cautious. Your stop loss should be tightened right below S1 at 25,790. If that breaks, exit and protect your capital. Though, for fresh trades, shorting on rises, the best strategy is to look for shorting opportunities on any minor bounce towards R1, 25,949, or even around the opening price if it's near yesterday's close. Keep a stop loss above R2, 26,050, and target S1 and then S2. Shorting on breakdowns, the more aggressive trade is to short a confirmed break below 25,800, S1, with a target of 25,720, S2. What would change the view? The only thing that could save the market is a dramatic reversal in global cues, specifically the US futures turning positive. But as of now, the odds are stacked against the bulls. Risk management is not an option today, it's a necessity. Position sizes should be controlled. Sector or final warning, a quick word on sectors. With crude down sharply, oil marketing companies, OMCs, like BPCL, HPCL, IOC might see some positive momentum. However, this will be overshadowed by the broad market sell-off. Banking and financials, which heavily influence the Nifty, are likely to be under pressure given the global risk-off mood. To conclude, the stars are aligned for a negative day. The global cues are poor, and our technical setup is vulnerable. The key is 25,800. Trade with the trend, which is currently down, and avoid catching the falling knife. That's a wrap for this urgent pre-market update. The market is giving us a warning, it's up to us to listen. If this analysis helps you navigate the markets, please support the channel by liking this video and subscribing. It really helps us grow. Let me know in the comments, are you going to short the bounces or wait for the breakdown?